everyone. Good morning, good afternoon. Thank you all for joining in. We're beginning with our immersion today, which is on my favorite topic personally. We're talking about India being the new hub for neobanks. Neobanks have been not a common phenomena in the past 5 years, but in the recent times, it has become one of the biggest talking points for the banking and financial service industry. We've seen different formats of neobanks popping up, especially in the Asia Pacific market. And India has now shown a phenomenal growth of double digits. We call it about 40 to 45% in terms of numbers of how neobanks are progressing. I have an amazing group of individuals today joining me to decipher this topic, give us more insights about what is neobanking industry going to look like in India? How is it going to shape up for the future? And to hear from them what are their takes in terms of profitability, sustainability, as well as growth strategies for neobank. So thank you so much for joining in. Let me welcome them. I have Vaibhav, who is the CEO and the co-founder of EasyPay. I have Bala Parthasarathy, who is the CEO for Frio Bank. I have Dr. Jasmine Gupta, who is the CEO of Lakshmi Bank. So thank you guys for joining in. Let's start the discussion. It's a pleasure today to have you. And let's first start by having a first introductory question for the audience and then begin our discussion. Can we have the first question up on the screen, please? Guys, scan this QR code to join in. We will also be sending in the link to join to this quiz. It's a fun interactive version, very easy questions along the side as we move across in this discussion. I'll just give 2-3 minutes for everybody to join in. Meanwhile, our esteemed experts, do you guys want to have give a quick intro about yourselves, please?
Yes. Thanks, Monica. So let's start with the lady.
Okay. So yes, while you've already introduced me through Lakshmi, so I have joined Lakshmi as CEO and co-founder, and we are building India's first bank for women. Having said that, I think my background is I've been a career banker all throughout with HDFC Bank, Kotak Bank, and Equitas Bank, where I was heading neobanking. And I think it was, like you mentioned, Varnika, neobanking is something very close to your heart and it's your favorite topic. It's same applies to me. It's my favorite topic. It's my place where I want to, create an impact. And that's what brings me to Lakshmi. That's my short introduction. Thank you so much.
Thank you, Jasmine. Bala, Vaibhav.
Sure. So my name is Bala Parthasarathy. I'm the co-founder and chairman of Frio. Frio is probably one of the most profitable neobanks that is out there. And I've been an entrepreneur all my life. For the last 30 years, I've started and sold many companies both in the Silicon Valley. You might have heard of several companies, but including Snapfish. In India, I've started various things, including a venture fund called Prime Ventures, and a number of fintech companies, including EasyTap, HapPay, which are all sold recently. And Frio is a company we started a few years ago, along with my co-founders, Kunal and Anuj. We've been in business. We have done various things, but our goal is to expand banking. And with your permission, Monica, if I can take like a minute to explain sort of why we're doing this.
Yes.
So if we just take like the big picture view of this before getting into profitability and sustainability and all of that, the big picture view is because we tend to sort of very focus on the immediate today, yesterday action. But if you just zoom out a little bit, 30 years ago, the country only had public sector banks, and then HDFC came in and ICICI and in all the other dozen or so private banks came in. and they completely changed the game, right? The quality of service, the technology, ATM machines. I mean, like just amazing stuff happened compared to what it was before. Um, and they're all large, profitable, well-run institutions, especially some of them like HDFC Bank. I have a huge amount of respect for that. But what happens every decade or so is that the entire technology, the world changes, right? So just like Amazon has come and completely changed what retail means, right? Airbnb has changed what hotels mean. Uber and Ola have changed what transportation means. It sometimes is very hard for an existing player. Like for example, there was Meru Cabs, some of you might remember, which was doing well at that time. But it's very hard for them to completely say, okay, I'll also build an app and become Uber, right? Because you have to change the institution, you have to change the thinking, and you can't just like retrofit. And that is what is happening right now. So almost every bank in the country has a digital initiative, and the finance minister has mandated that everybody should go digital. So there is notion of digital banking is not new. It's been around for like 15 years, right? But what digital bank means different things to different people. Usually there's a chief digital officer, chief innovation officer,
Right.
but they're not the profit center, right? So they're kind of sitting there doing something, and they do innovate. They do a lot of interesting things in their context, because as a bank, as a public bank, you have to report profits every quarter, right? So
Yes.
there are a lot of requirements that the constraints that they come with. And that's why startups exist. So when I started, when we started Frio, which was called Money Tap at the time, people would ask like, why wouldn't this bank do it? Why wouldn't that bank do it? They can, right? I mean, HDFC Bank could have done a Paytm. They could have done a Google Pay. They have all the ability, right? They have money, they have talent, they have very smart bankers, but they
Right.
didn't, right?
Yeah.
The truth is the incumbents never do, not because they don't want to, but because they can't. And that is why neobanks exist. So if you think that India could support, 20 or well-run private banks, India can support, 100 neobanks, right? In terms of what neobanks do. And I'm sure we're going to get into this in more detail, but we have to look at where the world is going to be 10 years later, not like where the world is right now. And
Sure.
absolutely, there is no doubt that our kids are never going to walk into a bank, right? The bank as exists right now will not exist in 10 years, or even now, actually, even 3 years probably. So I'm going to pause here, but that is sort of the bigger picture. And there's a reason why we started this, because you want to be a part of the future, not like tinkering with the present.
No, I absolutely agree with it. Yes.
Adding to that, Vernika, I remember my experience with Frio. So Frio, I was on the other side of the table when we launched Frio Save, which was the first, I think from the Frio, product basket, it was one savings product that Frio was launching with us. And I was so happy because I think right from initiating to developing to the entire life cycle of even launching Frio, I think the entire cycle was an excellent experience, Bala. So yes, Frio is also very close to my heart because after NeoX, Frio was the second neobank that we launched, and yes.
Thanks,
Amazing.
Jasmine. I remember that, and we appreciate it. And we'll talk about that later as to how neobanks will cooperate and exist with the other banks as well. So,
True.
but that's
Yeah.
a great point, Jasmine, and thanks again for for helping launch Frio.
So
Great.
hi, Varnika. Hi, everyone. This is
Hello.
Vaibhav Joshi. So I'm now the co-founder and CEO of EasyPay. We are trying to create a MSME neobank stroke embedded finance platform. I have been a banker as well. Prior to this, I was with Equitas Small Finance Bank. I was the chief digital officer. Prior to that, I was with Yes Bank, the national head for digital banking for close to 6 years. And prior to that, I've done 3 startups of my own: one in food, one in payments, and one in tech. Uh, so generally, whenever we talk about neobanks, I like to ask this question, and I think I should point it to you, Varnika, over here, as a part of my introduction. So, when was the last time you visited a bank, Varnika?
It's been years. I will
It's
be
been
very
years.
honest. Yes. At least the first hand experience for me for going to the bank was one at the time of my induction when I was first starting my job. And the second was at the time of demonetization, where we had to stand in the lines of queues. And I think after that, it changed the game completely for me.
Exactly. And that is where we are headed. If the generation that is today is not been to banks for a long time, okay, then just try to amplify the words that Bala said, the next generation.
Yeah.
And neobanks is, banking of the future. Neobank is uh, definitely banking of today because that's where we are starting, but it is banking of the future. At the end of the day, if we have not visited banks, then we don't expect our customer segment to visit banks either. We are so much used to this, screen, that anything and everything we want actually, has to go within that screen. So we have this format called as, pixel manager, that
Yeah.
every, tiny bit of that particular screen is extremely important.
Mm-hmm.
Okay. And people within, product managers need to fight who is going to go where. But that's neobanking for you, Varnika.
Yeah.
And a little bit about EasyPay, so then we can start.
Yeah.
So I'd helped co-found EasyPay in 2014 with a friend of mine, 2 decades old friend Nilay Patel. And post that, I joined Yes Bank in a full-time capacity. And very recently, now a quarter, 3 months, I came back to EasyPay. What we are trying to do is we are creating MSME focused neobank. The target segment is extremely clear. EasyPay has the tech stacks that it has been developing with Yes Bank, Equitas, ICICI Bank, NSDL Bank for the past 5-6 years now. We have been catering to a lot of a few million retailers rather, and we'll talk more about it as we get into the immersion. But the idea is that we feel that MSME as a segment is a highly neglected segment by banks and financial institutions alike, because the focus for them is always on corporates, multinational corporates, and consumers. And that is where we feel that we can create a niche for ourselves with this product that we are coming out with. And yeah, so that's my introduction for you, Varnika.
Great. Thank you. And thank you so much, guys, for spending a few minutes and explaining the concept as well as what you guys are doing. And that's exemplary. So let's dive in. Let's take the first question for our audience. Can we start the quiz, please? Great. So very simple question we have today is how many neobanks are currently active in India? There are 24, are there 18, are there 36, or are there 32? So I'll repeat, how many neobanks are currently active in India? Let's take in the responses. I think we'll spend a few seconds over here so that even our LinkedIn community can respond to the quiz. Any guesses from you guys? What do you think? How many neobanks are there currently active? Jasmine, if you had to pick a number.
I think I would pick up anything around 24, around that maybe. Yeah.
24. Yeah. Okay, that's a good bet. Cool. I think let's move on. Yes, Bala, you were saying something?
No, I think there are probably more than 35, is my guess.
More than 35. Okay. Let's see. Think.
Yeah, it can also be 32, Vaibhav, if you want to guess.
I think the four of us can take one answer each.
One answer each. Okay, great. I think out of the 6 respondents, 3 said 50% that it's 36. Yes, there are 36, and this spans across your millennials, your Gen Z, your teens, your SME, MSME segment, in fact, even rural segment as well. So great. I mean, this is a phenomenal growth, I believe, from the last 3 years where we had about in 2019, I would say, when we first did this research on how many neobanks do we have, we started with a number of 15, and today we are at the number 36. So you can see within 2 years itself, it has grown exponentially. However, can we stop sharing the screen, please? However, what I believe is what India is lacking today is a formal regulatory regime to govern and manage these digital banks. There are gray spaces in which we perform, and a lot of it is dependent upon a traditional banking licensing framework. Which brings me to this very big question, that how do we sustain the growth of neobanks in the long term? We've seen a growth of these many coming in various customer segments, but what does the future look like for them in terms of their sustainability? And also creates a question mark on in terms of profitability, because right now we work on shared profitability measures, which is spread across our traditional banking partners, spread across our embedded finance ecosystem partners, and also spread across between customers if you're talking about in terms of B2B. So why do you think, guys? Let's start from Jasmine first, then we'll hear from Bala and Weber. Where do you guys think that is a silver lining for neobanks?
So I think, Varnika, while right now we don't have a regulatory licensing regime, I think last month,
Yes.
Niti Aayog has recently put up another proposal. Once, I think it was put up in November, now again in July, wherein an entire framework of how digital banks can be regulated by RBI has been put up for proposal. And I think it's a wonderful proposal, wherein it says that you should start with a restricted banking license
Mm-hmm.
with a requirement of a minimum paid up capital of, say, 20 crores.
Mm-hmm.
Once the fintech and this restricted license should allow the fintech to work in the regulatory sandbox. So it is in a controlled environment where they can innovate, where they can try out, experiment new things to address, the various problems that we want to address. And then once it is ready, it graduates to a full-fledged digital bank license, where of course the minimum paid up capital requirement is 200 crores. I think it makes a lot of sense. And I think Niti Aayog has also put in a lot of homework in terms of what is happening on a global level. So while we see that Singapore, Malaysia, Hong Kong, UK, they all have started giving digital bank licenses. And I think we have also seen the impact on the profitability of the neobanks in these regions. While, for example, Starling Bank is one example, which has become profitable on a monthly basis from 5 years. I think within 5 years to achieve that profitability was possible because it had its own license. So I think in India, we are on the way forward for was getting a digital banking license. And I think after payments bank and after small finance bank, that is naturally the next step forward. And I think the entire industry is hopeful that we will definitely get there. Having said that, even till the time we don't have those licenses in place, I think neobanks have a profitability model, which works, of course, on a sharing basis, because the only way to go about is partnering with a licensed bank. And that's the only model that exists right now for us. Having said that, I think there are a lot of opportunities wherein neobanks can differentiate and can ensure that the profitability. So of course, when you look at a profitability from a banking balance sheet, you make the net interest margin out of assets and liabilities, right? So I think that same logic, and of course the third party products that exist, I think the same logic exists even when it comes to neobanking, except for the fact that it gets just half or lesser than 30-50% in that range. So the margin, of course, gets reduced on both sides of the balance sheet. But of course, fee income is something where they can definitely make up on the profitability. Having said that, I think while these are the major revenue lines, what neobanks bring to the table is differentiation, target segmentation, and that entire innovation strategy, which actually makes them profitable. And I think once we go deeper into this discussion, we can discuss more in detail of how neobanks can differentiate, how that customer experience journey can actually help them be profitable in the long run, in spite of the regulatory hurdles that we are facing in India right now.
However, and I've heard from a regulatory standpoint, not even after Niti Aayog's revised proposal, we don't see that the RBI or the regulatory environment is bullish about this concept per se to bring in a formal structure, whereas it has been widely receptive in terms of establishing digital banking units or payment banks or from the standpoint of small finance bank. But when it comes to digital only banks with a standalone identity and a governing structure, I believe that RBI has not a very favorable point of view. What do you guys think on that?
I think rightly so, Varnika, because of course, RBI needs to be very sure that, it will be able to regulate the entire fintech industry. So I think it will be a cautious approach from the regulator, and I think it will take a step-by-step approach to get there. But I think the digital lending guidelines that we saw recently last week was a step forward, a positive step forward, and we are looking at many such steps coming in and leading us there.
Great, thank you.
So if I may add to that, so Jasmine has covered like actually most of the important points with regards to the regulation. So that is how broadly the industry feels. But let me just try to address the sustainability part of it and then tie it into regulation, right? So if you just step back, what a bank does do in the context of at least consumer banking. I can't speak for SME because that's not my area of expertise. But when it comes to consumers, broadly, banks do three things. First is savings, right? Take your deposits, right? FD savings. So that is taking your money. Second is spending, right? Credit card, UPI, etc. And third is, of course, lending, right? That's where lending you money to various people. Obviously, they do more stuff like remittances, forex, they do various other things. I'm kind of oversimplifying but these are the three big things.
Yeah.
So when most people think of neobanks, they think of basically savings, right? Because that's kind of what is important. And to reiterate what Jasmine said, one should be cautious, right? Because if you go very fast and let startups do whatever they want to do, there'll be good startups, but then there'll be scammers, right? And we've seen that in the Chinese lending app scam that in the last 2 years, where you'll completely undermine the trust of the public, right? If the public doesn't believe in banks, you'll step the whole country back by 10 years, right? Because they will crack down and then nobody will fund it, the consumers won't use it, businesses won't use it, right? Because you're putting your money in. Lending is a different story, right? At least you're getting money, right? Imagine deposits and you don't have trust and people are disappearing, right? So I totally think that a cautious approach is the way to go. But coming back to these three and coming back to addressing the question of, so that's on the regulation, but on the sustainability, I don't think they need to necessarily, you need to solve regulation in order to be sustainable. But obviously you have to be sustainable, otherwise there is no business, right? So the regulation will kind of evolve in its own pace, and I think it should evolve in its own pace. You should get into a sandbox. You should work. You should have some experience in working with an existing bank, right? You should show some track record before suddenly you accept public money, right? Deposits, because as we have seen in other, even with our own banks, right? When there is a customer run on the bank, the trust in the whole system comes down, and RBI has to step in and save, basically, right? So it's a very the moral hazards in that. So, but coming to the what a neobank should do, what an existing bank doesn't do, right? So, what does an existing bank do? Mostly, it's branch-led, right? You open up a branch in the main street, people walk in, and then you serve everything that the customer has, right? If the customer comes in, you give them savings account, FD, you sell them mutual funds, like whatever you can sell that person before he walks out of the bank. That is basically the model which has been there for the last 100 years. With a digital neobank, we don't have that luxury, right? There is no main street. The main street is a Play Store, right, or an App Store. So the customer is not walking in, and an App Store or a Play Store, as you know, there are 10,000 other apps, right?
True.
You have to compete to get. So as far as the neobanks go, they need to solve the same problem, right? Savings, spending, and lending, right?
Yeah.
To oversimplify. But you need to innovate, right? So otherwise, why would you exist, right? HDFC Bank will do the same thing, right? Equitas is doing the same thing. So you need to do something, bring something to the table that is faster, better, cheaper,
True.
more efficient, more user friendly, so
Yeah.
on and so forth, right? So that is the role of the neobank, to do these functions efficiently, and to come up with the specific coming back again to regulation. The most so lending is already regulated, right?
Yeah.
NBFCs, there's a whole digital lending thing that they just
True.
announced. So lending has been regulated for years, and so there is no more regulation needed for lending, right? There'll be too much regulation,
Mm.
right? Spending is a different story, right? So spending, we saw this PPI thing blow up a little bit. So
Mm.
there is still, that is still in flux, right? How do you, so because you can't issue credit cards if you're not a bank, no, most banks don't issue credit cards, right? So
True.
that's a different story on spending,
Ending.
right?
Yeah.
So there is regulation on spending, PPI and so on. So there's a different topic. On
Mm.
savings, which is really what we're talking about, right?
Mm.
One doesn't need to, because savings is the place where there is no money, right? So there is no revenue model for any of the neobanks or the existing banks in saving. But
Mm-hmm.
banks need to have a deposit base in order to lend. That's what the banks do, right? You
Yeah.
take a deposit base and then leverage it up, right? 6 times, 8 times, 10 times to borrow money and lend. Now it's totally okay for neobanks like us, and thanks to Jasmine, we partnered with Equitas, and we have launched a product, free or save, right? So as far as the user experience is concerned, it's free or save, but the bank behind is Equitas, it's powered by Equitas,
Yeah.
and that is totally okay, right? So the customer experience is pretty good, right? I am a free or save user. I have all my basics are covered as far as savings are concerned, right? So I don't think there is a big deal, is what I'm saying. Startups, and not only us, others have sort of worked well with existing banks, like a little bit forward thinking existing banks, not all existing banks, to
Yes.
solve the customer problem, because neobanks need to solve the customer problem, right?
Right.
And do it efficiently. So
Right.
in short, even with a regulatory framework that is clearly evolving, and it should
True.
evolve slowly,
Yeah.
one can and should build sustainable models. The sustainability doesn't come from the savings, it comes from lending. So that's
Yeah.
the only place where there is money in the finance business. Spending also doesn't have any money in it, right? Like there's no interchange
Right.
exchange, there's no money there.
Mm-hmm.
So in order to be sustainable, you need to solve lending.
Mm-hmm.
And that takes years. It's not easy to go in and start lending money, right? And
Yeah.
get it back, of course. So anyway, that's kind of my take. Vaibhav, I'll be very curious to know what you think.
Sure, thanks, Bala. So, Varnika, normally what happens is, and let me, slightly come at this question from a banker's point of view. Okay,
Mm.
because in my previous avatar, I was a banker. Now,
Mm-hmm.
if you look at banks, see, banks are a heavily regulated entity.
True.
With whatever product the bank takes into the market,
Mm.
there are a plethora of regulations that follow that product. When a new product gets created, so much so that we were talking about savings, so even a variant of a savings account or a variant of a current account gets created, there
Mm-hmm.
are 50 committees through which that particular product note goes through. People have to sign it off. Okay, there are so many the compliance and risk conditions, okay,
Mm-hmm.
are put in, and then those are coded into the bank systems to make sure that the product actually fits within that regulatory framework.
Right.
And I'm talking about the simplest of the product over here, which can be a savings account or a current account. Okay, now when a regulator,
Mm-hmm.
okay, puts in a regulatory framework and
Mm-hmm.
then a governance framework to govern those particular regulations,
Right.
okay, India has a very well system, a very well defined system for banks for all the products. Now, suddenly, if we say that tomorrow all the fintechs are going to get regulated as well,
Mm-hmm.
okay, then where is that system in place? Where are this framework in place? Where are those guidelines in place? It has
Mm-hmm.
to happen eventually and slowly, okay,
Yeah.
because being within that regulatory circle
Mm-hmm.
is not a simple thing. You
Yeah.
have to be extremely careful of the minutest of the things,
Mm-hmm.
okay, because ultimately banking functions on one word, trust, and
Mm-hmm.
it is the customer who trusts you with the money.
Yeah.
And at the end of the day, if the customer has trusted you with the money, then it becomes your responsibility to make sure that you don't play around with the money. And that is why the regulations exist in the first place.
True.
Having said that, neobanking today, the way it is
Mm-hmm.
really taking banking to the next level, because as Bala was mentioning, other than few banks, that we can actually count on our fingers, A
Hmm.
lot of banks are still focusing on the traditional brick and mortar model.
Right.
For them, digital is a channel. For them, digital not is not a way of business.
Business.
Whatever
Yes.
banks I have worked in the past, I used to run a profit center, whether it was Equitas, whether it was Yes Bank. So digital
Mhm.
banking, we used to run a P&L. Okay. And that is why we launched what we launched right during Yes Bank
Right.
days. If you talk about all the 70% of the fintech ecosystems in the country to Equitas, where we talk about the NeoX, FreeOSave, Google Pay, Bank Opens of the world, and Grow of the world. But generally, what happens is, there are very few banks who have created or brought their technology to a level where
Mhm.
it is within the regulatory comforts,
Mhm.
yet it is been extended in a manner that the fintech can integrate.
Mhm.
And then whatever transaction happens, whatever
Right.
onboarding happens, everything is within that governance framework. Okay.
True.
Now, neobanking actually functions so in India, or globally, in fact. Okay,
Hmm.
there are four key ways, or
Mhm.
you have save, you have pay, you have lend, you have invest. Okay,
Yep.
those are your basic fundamentals when you talk about a neobank or a fintech for that matter. Payments took off very early. We had
Right.
very early adoption of payments with UPI coming in, and we have
Hmm.
seen where UPI has gone today. Fortunately, it's payments where you can just pay from any account to any account. There are
Hmm.
regulations, limited regulations, and beautifully fintechs and banks have integrated.
Yeah.
You so there are multiple models. You do a deep integration, you do TPAP, so on and so forth. PPIs, of course, MoneyTap has been one of the pioneers, since 2015 doing PPIs with RBL and other banks. So PPIs have also taken off. Okay,
Yeah.
other than the small disruption we saw recently. So yeah, yes, this those innovations also keep on coming in, and then the
Mhm.
regulator steps in the right time that hey, you
Hmm.
know, you are doing innovation, but stop. This is not permitted.
Hmm.
Okay, so it's like a when you're driving a car, you have acceleration and you have brake. Both play its own roles. Both are extremely important. So when we accelerate and when to brake is a
Yeah.
function. And then coming to the third one and the fourth one, which is lend and invest. Probably the two things where the money is made. And I'm just adding invest to what Bala said, lending. So these are the two places where actually the sustainability and the profitability will come. And
Come from.
both
Yeah.
these products, both this line of products are heavily regulated. While
Right.
lending is heavily regulated by RBI, invest is
Yes.
heavily regulated by SEBI as well.
Yeah.
Okay, so neobanks as a whole, if you ask my take, that yes, the regulator should come out with a licensing regime, and I
Mhm.
think as Jasmine rightly pointed out, Niti Aayog has taken re trying to get the regulator to relook at the proposal with some renewed clauses. And we are hoping that that should come in because at the end of the day, the agility and the nimble footedness of
True.
distribution,
Yes.
of digital disruption can only be done by neobanks because banks do not have that kind of a infrastructure. They just cannot go ahead and do that. While they may have the physical infrastructure, at the end of
Yeah.
the day, that agility cannot be brought in because of the same point that we are discussing. They are a regulatorily heavy institution, and you need agility at the distribution
Mhm.
level.
I completely agree because traditional infrastructure always gets into this, I would say, a diamox in the sense that you buy versus build, and how much can I buy or how much can I build? And there is a lot of inflexibility in their environment to take these kind of decisions, which neobanks at this nimble level can have that level of flexibility as well as scalability to take it to that another next level and compete in global markets. Bringing that concept in, India has also been a big area of play for investors, and we see a lot of influx happening in terms of funding. And the key reasons why it has happened is because there are certain market drivers that drive the overall neobanking industry. That brings me to my second question to the audience. What, according to them, so if we can have the screen up, everybody can start logging in again to the quiz. Okay, the leaderboard. So we have I think that's Rachel, who's won as for the previous question, and then we have Vansh and Akshi. So congratulations, guys. I think we have few more questions for Ted and Jake as well to start again. So let's start the question. Yes, so we have the second one coming in. Which of the following are market drivers for neobanks in India? Is it financial inclusion? Is it non-traditional competitors coming in, which is the likes of the startups in the fintech environment now entering in a core banking play? Is it data monetization, which also stems from the open banking technology and has now become a phenomena which we broadly classify as embedded finance? Is it the cloud technology that has built in the foundational aspects for neobank and the availability of high-end technology across the players of AWS, Mambu, Azure, Google Cloud that has enabled various banks to create a very nimble infrastructure, or is it all of the above? I'll again say, which of the following are the market drivers for neobanks in India? What, according to you, do you feel are these drivers? Let's hear it from you guys. And then we can also, I think we lost Bala. So while everybody is answering in, he can rejoin.
So I think, Varnika, all of the above and a few more as well, because at the end of the day, what happens is when we
Right.
talk about market drivers, okay,
Mhm.
India being such a varied country with
Mhm.
such a varied population, okay,
Yeah.
we multiple segments. I think
Mhm.
you
Oh,
have the
everybody
answer
got
over
it right. Everybody got it. Very good. So let's see the leaderboard, guys. The catch about is once we finish all the questions, the top people will get a free copy of our latest report, which is the revised version of India, the new a hub of neobanks. So that's the incentive. So continue with us throughout the end. We have three more questions to go before we close the day. So yes, please go ahead, Weber. Sorry.
Yeah, so I was just saying that India being such a varied country with
Mhm.
a, diverse population, and geographically we are extremely populous as well.
Yes.
Okay, so that actually stems in a lot of opportunity areas. Okay,
Right.
and that is why, for maybe a Uttar Pradesh it can be a financial inclusion, but when
Yes.
we talk about a a metro kind of structure, then it may be data monetization or cross sell. Okay,
True.
when we talk about a certain segment like northeast, where
Hmm.
in the far areas the banking is still traditional, there it probably maybe the
Hmm.
uptake of the mobile phones and the apps, okay,
Mhm.
and then something fancy coming in. But
Yes.
then if you talk about a segment like women, for example, okay,
Hmm.
that Jasmine and Lakshmi are trying to build, and it can be something as key as invest or save, because
True.
we know women are best at investing and saving, unlike guys who are, for them it might be spend which or pay.
Hmm.
So
Yes.
yes, I think there are a lot of drivers which are there that are driving neo banking.
So, what do you think? So, in this sense, and as a continuation to that, and how I started in the beginning before this question arose, these drivers have actually become a launchpad for many investors to make their decision of why they would want to invest in a particular neobank. And it has also become a hotspot for investors that over the period of time, you've also seen in the last 5 to 7 years that the investment activity in these neobanks has increased, and a regular cycle of investing from a series A to even reaching to a series F kind of flow has built in from the investor. So why do you think that is there, and do you think that is going to continue being that bullish market for them?
Yeah, so definitely, Varnika, and the reason being, see, let's understand what the investors are looking at the end of the day.
True.
When any fund or any investor wants to invest in a particular fintech or a company, they are
Mhm.
looking at value creation and they are looking at X revenue multiples. Okay, these are
True.
the two basic things that they are looking at. Now,
Mhm.
if through agility, uh,
Mhm.
a neobank or a fintech is able to reach out to 10x the reach that a bank has, or maybe 100x the reach that a bank has in a traditional manner, and
Mhm.
still be able to extract the value and service that customer, and then make him prime, and I'm using the word prime, make him
True.
prime for upsell and cross sell. then why would an investor not be interested?
Yes.
Okay. We have seen, uh, I will give you example of probably FreeOSave itself because Bala is there. Okay. A savings account that can get created. So within 2 minutes digitally,
Right.
where you just download the app, you put in certain data. There are certain APIs that gets pulled at the back end, and the savings account gets created, and then it is ready, presented to you for your, with its minimum limits,
Right.
presented to you for its operations. Okay. Now, when you go to a brick and mortar setup, that itself is a half-day process to do
True.
something like that. So there is a value creation over there. Okay. And now, when we talk about something, a process as rudimentary as creation of an account
Yes.
being disrupted digitally and able to do it under 2 minutes, and then scale it up to, probably a 5 million, 10 million kind of a number. Okay, then we are talking about not just value creation, not just scale, but
Yeah.
monetization.
Monetization.
That are the revenue multiples that I'm talking about. That is what investors are looking at. And once you have that customer as a neobank or as a fintech, you have the customer within, using one of your products. Imagine the type of data you are pulling from that customer, and imagine the type of cross sell you can do to that customer.
Right.
Okay. If you are able to rightly provide him the products,
Yeah.
then he will be your customer for life. He will never leave your ecosystem.
True. Because some of the times what I believe is that a lot of startups, what they do is they create a dormant pool of customers, whereas to show as in terms of the volume that they are bringing into their digital banking app, whereas in terms of transactional value, which actually the customer is regularly engaging with the app and conducting various or servicing various journeys, that in itself is not happening. So in that case, that disconnect brings in the money is flown in to build those capabilities, but it is not actually actively servicing a particular customer, which I believe has become a big challenge for in terms of in the neo banking ecosystem.
Yeah, and I think, Varnika, that's the reason why I think neobanks focus a lot on engagement and retention. So while
Right.
customer acquisition is the easiest of the thing to do, and of course, neobanks with their own, with the digital acquisition model that we have, you can actually acquire 10x of the customers that traditional banks acquire and take 5 to 10 years to acquire, right?
Right.
So acquisition is very easy. The most difficult thing is how do you get the customers hooked on to your products, make them keep coming to your app again and again, and provide those value added services and products that makes it really useful for them to actually keep on using your products. Right? So
Right.
I think there are some differentiators that neobanks, and I think neobanks are really good there as compared to the traditional banks, because that is something the traditional banks can never do. Like, for example, neobanks, we see a community approach. When you have a community, which is a closed and a safe group of people, identical set of people, where you give them a platform to share their views, opinions, talk, ask questions, get into conversations. I think that is a very safe space which people definitely want to look up to.
Right.
And that is where I think a lot of, the gaps and the opportunities and the problem statement that you as a neobank are trying to solve gets addressed. For
Right.
example, financial literacy is a core problem for,
Mhm.
right? And in fact, if you look at even the regulator insists at a policy level that the neobanks should start participating in this direction.
True.
So if you have a community, and this is what Lakshmi does, we have, boot camps for women, we have workshops for women, we have money coaches. They
Yes.
answer specific questions that women ask on the community, because every woman is, while it is a target segment, it has different personas within that target segment. So we
Right.
have housewives, we have salaried, we have self-employed, we have mothers. There are
Mhm.
a lot of personas, and they have very unique financial requirements, right?
Mhm.
So financial literacy is one value add which they definitely look forward to. They want to learn about finance and then start their financial journey, right?
Mhm.
And then
Right.
when you have offered the products of saving and payments and investments and lending, and that's
Right.
where also I think there is a lot of scope of engagement. It's not just the products that you just stick around and offer it. That doesn't make it a platform. And
Yes.
what is the differentiation that you are bringing in the products? Like, for example, if mothers are a key segment, am
Mhm.
I able to curate a child education portfolio for them, which makes their life very easy for investing for their child's future education,
Right.
right? I am giving them something which is very goal specific, which is
Right.
very, required for them. So then they will want to do savings. Then they will want to monitor, okay, what is happening in my child education portfolio? Is it growing, not growing? Okay, what next I need to do? Okay, I have my money coach who will buddy and ask me. I can ask and, get these the questions resolved. So these are very important engagement tools, and I think that is what neobanks really differentiate as compared to the traditional banks. And I think this differentiation, and of course the gamification aspect, wherein even when you have to I mean, financial literacy can also be gamified, right? So we have Housey and we have, Wordle and all of the new gamified learning techniques to ensure that people love coming on the app, people love learning on the app, people love investing on the app. We make investing very easy. Out of
Right.
400 mutual fund schemes, I mean, can you expect a woman to research all those I mean, it's impossible for any woman to understand and make sense of how to start my journey. And that's
Mhm.
where we make it very, very simple and easy for them to understand through the curated portfolios. So I think there's a lot of the community, then the target segmentation, the customized approach, the persona based artificial intelligence and analytics based product offerings. I think these are a lot of engagement tools which actually can ensure that
Mhm.
customers keep coming to your platform. They are not those ones who are
Yes.
just showed on the paper for investor purpose. Yeah, but they are genuine customers who keep coming in and who love to keep coming to you again and again.
Great. Thank you. Thank you. I think that was a great understanding. And just to help Bala give a perspective, since he dropped off for a minute, what we are discussing, Bala, right now is like we came up from there are multiple market drivers in India, considering the demographic and the overall geographic spread of the country, which brings in a lot of customer personas, brings in a lot of customer needs that neobanks are servicing, and has also become a hotspot for investors to put in their flow in their money. Whereas we've seen their initial uh, influx to their end influx from Series A, F, entry point venture, like seed capital, so on and so forth. However, globally, we've also seen that a lot of neobanks are now correcting their valuation, and the money is also now not at that level, that scale that had been earlier. So will India still be like a bullish market, especially when in that case it, as Jasmine rightly pointed out, that they're doing a lot to ensure that the customers that we're bringing in is are engaging continuously and retaining that level of loyalty with the bank.
Sure. Let me answer the question in two parts. I think Jasmine elaborated and said it much better than I could, about why a bank that is servicing a farmer to a corporate CEO cannot
Yeah.
do a good job with everybody, right? That's his definition, right? So Vaibhav's like SME bank or Jasmine's Lakshmi will obviously do a better job with women or SME because that's all they do. They think, lie, live, breathe, and die by that customer, right? So they
Right.
obviously will go much deeper and service the customer much better. Some of
Hmm.
them will do it well, some of them won't do it well, but that's what market forces are, right? Capitalism
Yes.
will weed out the guys who do it well and not do it well. So investors typically, so let me put on my investor hat. I started a fund called Prime Ventures. Prime is the leading seed tech investment fund in India right now, right? Over
Right.
$250 million in AUM. So the way I would view it as an investor is that people take a slightly longer horizon, right?
Yeah.
So everybody understands that some guys will do it well, some people will do some jugaad, some people will cut corners, they'll get caught. ऐसे होता है. That is what life is, right? That's what startups are supposed to do, right? Some will overreach, RBI will come and slap them in the hand. All that happens, right? But that is how market forces should play. And I would not look too much into detail on that. Obviously, the good investors will pick the winners, right? The others won't. But the point is, investors have a longer horizon, right? So they are looking at, like, back to where I started, right? So they're looking at like a HDFCs and ICICIs and yes banks came and disrupted and provided a level of service that an SBI or a Bank of India could not do, right? In the 1980s and 90s. Right now, as we all much discussed, you haven't been to a bank. I have not been to a bank. Nobody has. We are not going to a bank, let alone next generation, right? So these people are going to. Their bank means phone for them. That's what bank means. This. I do Swiggy. I do Zomato. I do Uber. I do Ola. I do bank. This is the only bank for them. So it's up to some startups will do it well. Some startups won't do it well. But the investors look at it a bigger picture and saying, do you believe that story or not, right? Or do you think that nahi, India पे ऐसा नहीं होता है, people don't believe in that, people still want face to face. There are people who believe that, right? So that is the bet they're taking. They're taking a bet that yes, there might be a generation, there might be a level of a set of people who have that comfort, who want to walk into a branch, but it doesn't make sense to have all the opex of running a main street bank, branch banking, because nobody wants, and especially after COVID, nobody will go in. So the bet is at that level. The bet is, do you believe this or do you believe that, right? Like 10 years later, right? I believe, obviously, all of us, three of us, we're all running companies because we believe in this, correct?
True.
And I think most of us, your listeners, would also agree to that that's where the world is going. So investors are placing a bet on that, right? Within that, some people, of course, some companies will do better. They need to create a sustainable model, like we talked about, etc. So, but the bet is a few people who are focused on very specialized segments will do them much better than these other guys in a new digital format.
Agreed. So I think that brings me to the final segment. We'll run through the 3 questions with the audience, get their feedback, declare our winner, and that also summarizes my final question to you guys, which is more about customer journey and their success metrics. So let's have the quiz up again, guys. If anybody has not joined in and would like to join in, the link to the quiz is in the chat here as well as on the LinkedIn Live. Please feel free to join in. Till now, again, Rachel and Vansh are leading. I hope with the next 3 set of questions, the entire leaderboard changes, but let's see. Can we have the next question, please? So which of the following customer segments is the main focus for neobanks in India? So this question comes in from the aspect that, essentially most of the neobanks are focusing at which customer journey, majority of them, whereas it may be more diverse in terms of like Lakshmi is catering to women. That is a much more diverse segment, at the same time niche as well. But we've seen there is a particular trend of focusing at one journey, which is more simple in nature and has been translated. So what do you guys think? Whether it's millennial, Gen Z population, it's more from an SME standpoint, which is actually a pain point for India, and the new rising segment of teens, because these are going to be a long-term bet for the neobanks. They start in early with them and then could own and manage their journey as and when they move into different horizons. So which of the following customer segments do you guys think are the main focus? What interesting for me is that in my years of research for this particular segment, what I've seen is now most neobanks are differentiating at a very niche level, like how Lakshmi is doing at a women level. We're doing it for freelancers and entrepreneurs at a different level, which also are becoming like an SME segment. We're doing it for farmers. We're also doing it for street vendors. So there are different niche markets. Okay, so I think the right answer, yes, is millennial Gen Z. So out of the overall 36 banks that we have, about 55% of them focus on this particular area. Yes, because we are a tech savvy, digital savvy population, is one of the reasons why it is, but also there is a longer sustainability attached to us. Let's see what's the next question about. Okay, Jake and Aparna are gauging and catching up, so maybe the leaderboard might change after the last two questions. Which of the following is a major challenge for the neobanks in India? And I think this brings in a very important factor that we've discussed throughout today. One is the lack of formal digital only banking license. We also talked about the long run profitability. One of the things that Jasmine also talked about was digital illiteracy, and all of the above. So it's extremely important to teach the community what we're trying to achieve and how can we help across their consumer journey, that is end to end, in terms of running in a gamified manner, or if we can run certain types of knowledge cohorts, whether it is in terms of coaching them or making them understand what kind of facilities or capabilities or kind of services that they can avail. So what do you think is becoming a major challenge, and how, in that terms, as we've spoken today in our discussion, that this is now being turned around by the leaders, and they are actually using them to overcome these challenges in form of strengths by ensuring that there are good partnerships, there are robust profitability models, and as well as educating their customers in terms of various product services, as well as the means to bank and how can they make maximum out of it. Amazing. Okay, we have all of the above. That's the maximum answer. Now let's see how the leaderboard has changed. Rachel is still winning, but we have Akshi coming up and alongside with Jake. Final question, guys, and that will bring us to our top 3 winners. What are the different digital measures of success for neobanks? Is it the CASA ratios, which is the current account, the saving account ratios? Is it the cost of distribution? It is the number of customer journeys you actually manage? Or is it about your active monthly users, the daily or monthly? Is it the partnership ecosystem that you've developed? Or is it all of the above? And I will now, after this, once we have the answer, this is my next question to our experts, and the last question in the interest of time. Apart from this, how do we establish the right success metrics for neobanks for their long-term viability in the industry? So let's have the answers first, and let's see who's the winner. I'm sorry, I think something happened. Okay, sorry guys, sorry about it. We have the timer running in again. If you can quickly put in your responses, and then we can see the leaderboard. Amazing. So I think Akshi, you won by 29 points. Congratulations. Followed by Jake and Aparna. So thank you for joining in and taking in the quiz. The team will follow up with you and share in the final report, as well as a trial access to the Twimbit platform. That brings me to the question to you three. In terms of, we've seen these various digital measures of success that we've been tracking continuously for all of the neobanks, whether in terms of products or the customer journey is managed. But what are the top 3 things that you guys believe are extremely important for us to define the success for a neobank, and has become a regular, has actually changed? So earlier, from a traditional standpoint, we used to see the number of walk-ins, the number of conversions, the sales funnel for a particular RM, the branch success, Those were the actual measures of success. But in digital only environment, these measures of success has changed. So what according to you guys do you believe? And in Indian context, what kind of measures of success the neobanks should actually track?
I can go first. The answer is pretty easy. So number one is profitability, right?
Yes.
Because sort of the funding party has sort of ended, or at least like paused a little bit.
Yeah.
So burning investor money to build all of this is not like a sustainable model. No investor today in every board meeting is talking about when are you going to get to profitability. So that's number one, which means that you have to do a couple of other things, which means that first of all, acquiring a customer and having an active customer. And Vanika, this is your point you made. It's just like not getting a database, right? And not having people ever come back, right? That's not acceptable anymore. So you need to genuinely actually engage the customer, whatever you do, right? Whether it's, you're in your segment, right? It's women, you're doing something, right? Getting them engaged and getting them to come walk into your door, because the challenge, the advantage a Main Street bank has is that they physically have a building with a big board, right? And somebody walks in, right? And then they'll catch hold of the fellow and sell whatever they can sell to that fellow, right? In online, the cost is very high, as everybody will tell you. To do that, it's not so easy because you're competing in a Play Store with like, literally a million other apps. So getting the customer cheaply and keeping the customer engaged and becoming profitable are the most important things. Regulation and all, we'll figure it out. That will evolve. You don't control those things, but these you control, and you should do these well.
Yes.
Yeah, and to add to that, of course, profitability plus, of course, customer centricity, I think is the core thing. And customer centric approach rather than a product centric approach, I think, will make a difference. So, when we say KYC, know your customer, it's not just the OTP verification or the in-person verification. It is also actually knowing your customer through all the data points, through all the digital footprint that the customer leaves behind, and then, of course, building on it.
So while profitability is the key underlying word everywhere, I would say, acquire, service, engage. And how smartly you are able to do these three things defines how fast you are on the road to profitability.
So can we say this is a good framework towards profitability for neobanks, where there is this three-step approach where we're talking about acquire, service, and engage, and across these three parameters, then there are certain level of sub parameters that we talk about in terms of acquisition, the number of customers acquired, the number of customers, the monthly active users that we have, what is your CASA ratio. In terms of service also, when we are talking about number of journeys managed, number of interactions, transaction value, all of that comes in. Can we subdivide this as in, because I think that will be a good takeaway for all of us as well as the audience, as well as we putting out an intelligent framework, that this is how you can manage the success journey of your neobank across these three stages.
So absolutely, Varnika, because there are multiple matrices and levers that come into play. So when we talk about acquisitions, how fast is your acquisition? Okay,
Yeah.
how smooth is your acquisition?
Yeah.
Is your acquisition adhering to all sorts of risk and compliance frameworks? Okay, if it's digital, then are we taking into consideration all the possible points that can come to bite you in the future to make sure that this is a proper legit customer? Okay, there are customers, two types of customers: one who will transact with you, one who has just downloaded the app because he's heard about it and is not gonna transact. Okay, second is servicing. Now, because it is a neobank and it's fintech, everything is digital. So you have to be extremely I am not able to find the right word, but you have to be extremely customer friendly, customer centricity, like Jasmine said, and you have to create that bond of trust with that customer, that we may be digital, but we are there for you, and that can only happen through your product and the experiences that you are giving him. Okay, so I kind of call it the Amazon experience. Okay, anything and everything you want, there is a bot sitting on the other end, and whether it's a conversational bot or a transactional bot. So servicing becomes the other aspect. And the third is again engaging with the customer, because engagement is where the profitability comes in. Okay, you understand, take out your dashboards, look at them, you segment, bucketize the customer, who is using what sort of products, if a particular product is running or not, you want to tweak it or not. Okay, what sort of campaigns you are running, what sort of response you are getting to those campaigns, so on and so forth. And then there's a very continuous engagement that keeps on happening, because finally a customer, LTV as we call, a lifetime value of a customer, has to be right there. Okay.
Yeah.
And that can only happen with a very continuous and smart engagement.
Got it. Great. I think that was a very, very insightful discussion. I think for me as well, I learned a lot about the Indian neobanking industry, and I'm sure that even our audience did. What we will be doing as a follow up is, since we have recorded this session, we will be putting this up on the Twimbit platform and sharing the link with the listeners in the audience today, as well as putting up a post as well on our social channels for you to access if any insights that you want to visit again. I will also be preparing with these great insights that we've shared today, a short summary in terms of what are the key takeaways so that our audience can benefit from there as well. And I would like to extend a heartfelt thank you to Vaibhav, Bala, and Jasmine for coming together today, sharing these great insights on Indian neobanking industry. I think we will regroup again. There are a lot of things that I still have in my mind that I can get your intelligence on. So thank you so much, all three of you today. Yeah.
Thank you so
Thank you.
much, Vanika, and thank you. It's been a pleasure to interact with Bala, Vaibhav, and Vanika, all of you. So thanks.
Thanks. And I just want to put in a plug for both Vaibhav and Jasmine, who we have worked with in the past. It's wonderful to see actual bankers come and switch to the other side, because I think the industry needs that. The ecosystem needs that. It's one thing to have entrepreneurs and techies and all that, but I think the industry is getting to a stage where we also need people who actually have done banking and not taking like wild guesses on what banking is to come and run this business. So I think from an ecosystem point of view, I think it's a great move. I'm glad you made the leap.
Thanks, Bala. Thanks for
Yeah.
those words. Thanks, Varnika. Thanks, Jasmine. Thanks, Twimbit.
Thank you. Thank you so much. Take care. All the
Bye.
best. Bye.
Bye-bye.